Welcome. Today we are going to talk about a chart of accounts for a commercial real estate company, some of the common issues we encounter with commercial charts of accounts, and the process for importing that very same chart of accounts. My name is Jerry Frank, and I'm co-founder and CEO of STRATAFOLIO. STRATAFOLIO is a cloud-based software solution for people that own and manage commercial real estate. We help in 4 specific areas: financial management, asset management, operations management, and investor management. And today we have Jennifer Clark, our onboarding lead, here with us, and she is an accountant, a QuickBooks Desktop certified user, and a QuickBooks Pro advisor. Welcome, Jennifer.
Thanks. It's good to be here. And I'm glad that we get to talk about some chart of accounts because we have seen some great and some not so great chart of accounts. The best chart of accounts that we have seen are the ones that are easy to follow, clear and concise, and consistent from one company to the next within an organization. While there are always going to be slight variations due to a company's needs, there should always have a consistent numbering system and follow the same pattern. That way, anyone in a company or an accountant or bookkeeper should be able to pick up the chart of accounts and easily identify which account is which and what it is used for. Yeah. While everyone's chart of accounts are slightly different based on your organization's needs, and that is why this makes it such a bit of a challenge.
I think those are some really good points. And one of the big differences between residential and commercial real estate are those triple net leases. And the triple net leases are leases where a tenant has responsibility for paying for taxes, insurance, and operating expenses. Do you want to talk a little bit about what else is different with triple net lease?
As Jerry said, most commercial leases will be triple net, meaning that you'll have extra expenses that are passed on to the tenant. These consist of common area maintenance, which is commonly known as CAM, insurance, and property taxes. That's what makes up the triple Ns. Sometimes this can be invoiced under the category of CAM, or sometimes they spread it out in all 3 categories. It just depends on how it's set up. These are the costs that are incurred by the property and spread out over all of the tenants based on the percentage of the building that they are occupying. The percentage is normally spelled out in the lease, as well as the do's and don'ts of what you can and you can't charge for CAM. Some of the expenses for an asset can be included in the CAM charge, and some of them just cannot. There are certain leases that will only allow a certain percentage of increases from one year to the next, or a max of how much you're able to charge for each part of CAM. So you need to look at the individual leases for the specifics. When expenses are paid for the asset, it's important to record these assets correctly as to whether they're CAM or they aren't. If you have it set up for specific accounts that are CAM charges, it's much easier to keep the charges separate as you go throughout the year. At any point during the year, you may be called on by the tenant to provide up-to-date CAM expenses that you have incurred, and it's very important to be able to provide those quickly and accurately. If you're recording them correctly into the proper accounts, it's much easier and it's much more accurate reporting to pull those records rather than all of the records and then manually separating them out and hoping that you did it the same way from one report to the next for the tenant.
Yeah, it is true. And this is why we really talk a lot about the importance of having a good chart of accounts for CAM, because then if you do get called upon to do that quick report, it's easy to do. And the other thing is like products like STRATAFOLIO make it really easy to do your CAM reconciliation at the end of the year. So why don't we now talk about some of the common issues that we have seen or encountered with charts of accounts that have some issues?
Sure. One of the things that we run into a lot is just the inconsistent chart of accounts across the organization. This happens over time, where it starts off on one way and it builds and builds and it becomes something totally different. This leads into extra time and effort to making corrections because there's a lot of inconsistencies where one organization, part of your organization, is recording an expense one way and another one's reporting it a different way. It makes it much harder for someone else to jump in and help, or if you have personnel changes, then things become lost.
Yeah.
Another issue is categorizing income. You really want to make sure that you are able to clearly separate out income or base rent, income for other rents if you have them, such as storage or parking, and also the income from CAM reimbursement. They're separate categories and should be recorded as such.
Right.
The other issue that we have, main issue that we've seen, is when your category is in CAM.
Yeah.
What you are able to charge under the lease and what you aren't able to charge under the lease needs to be recorded separately. Commingling of expenses is a very bad practice because you can't easily pull the reports, and you can't be able to for the owner or for the tenant when requested.
Right.
As a result, in issues with the CAM, we see a lot of issues with the CAM reconciliation. Again, anytime that the tenant wants to, they can ask for a CAM reconciliation, and you have to be able to provide that for them. So the best way is if you provide an accurate account of expenses and income to make sure that not only are your reports correct, but that you're able to cover your expenses. And that way, at the end of the year, you're able to make accurate adjustments for how much you may owe the tenant or how much you have been short. And also be able to make adjustments for future years so that you are making sure your expenses are covered as you go.
Thank you, Jennifer. That was a good summarization of some of the issues we've seen. And I think that's really important to keep in mind as you're developing your chart of accounts going forward. The next thing I want to talk about is classes and when should they be used?
Yeah, one of the great things with QuickBooks, especially QuickBooks Online, is the use of classes. They are commonly used for the separation of buildings or assets, or even sometimes units for commercial real estate. However, we have found that the best practice is when you have one building or one class, per building or asset. Just depends on how your QuickBooks is set up. Every organization will have different needs, but the main thing is to remain consistent between organization to organization just to get your full potential. In QuickBooks, you can even set a reminder so that when you're posting a transaction, if you don't have a class selected, it will remind you so that you don't accidentally forget to add a class. So it's a great thing that QuickBooks Online added so that way, just to be on the safe side.
Okay, now let's talk about sub-accounts because there is some confusion between when to use classes and sub-accounts. What are sub-accounts and what is the reason, or should you use sub-accounts if you're using classes?
Sub-accounts are hierarchical in nature, and they are subdivisions of a broader category. So for example, you may have utilities as a parent account, but then you also have water and electricity and gas as sub-accounts. Sometimes it's necessary depending on the level of detail and granularity that you require, and also depends on who's seeing the reports and how granular you want to go and how much detail you want to get into. However, you'll want to watch out how many accounts you make, because in QuickBooks Online, you are only limited to 250 accounts per company in the QuickBooks. So keep that in mind when you're setting this up. And also, as a rule of thumb, we try to keep under 100 accounts if at all possible. Sometimes it happens that you can't do it, but it's a good rule of thumb to try for.
Yeah. Yeah, and I think the thing that people sometimes forget is how this chart of accounts, when you ultimately prepare a profit and loss or a balance sheet, and how it's actually going to look when you share that with lenders and investors. So that is a huge consideration. Thank you for sharing all that super insightful information, Jennifer. Let's get to it now and show everyone how you actually import a chart of accounts.
Actually, Jerry, we have created at STRATAFOLIO a sample chart of accounts. This can be used for a new account, or it can be used to modify your existing chart of accounts if you need to. This is a sample one that we've created. All of these accounts may or may not pertain to your specific business. For example, elevators You may not have an elevator in your building and may not need that account, in which case you simply delete the line. Elevators, as you see in here, is under reimbursables. As we were talking about previously, the CAM expenses need to be separated out from your regular building expenses or overhead expenses.
Mhm.
So we have separated them out this way. This is going to be your parent account. And then you have reimbursables cleaning. That's a sub account of it.
Mhm.
If you're going to be importing this fresh into QuickBooks, you simply make it as the parent with a colon and a space, and then the sub account. That will import it automatically into QuickBooks as a sub account, and you don't need to do any other editing.
That's awesome.
Yeah, and if you've already had the account, so say you already have an account that's called reimbursables or CAM, whatever wording works for you, and cleaning, you simply add it in QuickBooks and tell QuickBooks that it is a sub account of the reimbursable expenses.
Right.
In our chart of accounts, like I said, we have the reimbursable expenses are going to be for your CAM expenses. We also have it separated out as business expenses. Those would be your expenses for the main overhead of the main business, the main building. Any expenses that are incurred for the building that you cannot pass along to the tenant for whatever reason for expenses for reimbursables. So that is the reason why we have it separated out. So such as property management fees are typically not included in CAM depending on your lease. We also have then the overhead expenses. These are going to be expenses for your business that would not, are not dependent on the tenant, are not dependent on, so computer software, you're going to buy that for your business, whether you have a tenant in that building or not right then.
Mhm.
So these are your overhead expenses. So we have them separated out into those different categories so that this is easy to see for anyone to know that this is an overhead expense and this is a business expense, very clearly separated.
That is really nice. I honestly think this is a work of art.
We think so, yes. And this is a living and breathing chart of accounts. This will change over time as your business grows. You may have different expenses. You may have different expenses that move from overhead to business, or that can change from a business to a CAM expense, depending on the tenant.
Right.
Again, this is living and breathing. Some of these accounts may work for you and some of them may not necessary. You may not have payroll, so
Mhm.
you may not need these.
Right.
So it's as simple as deleting or adding extras if you need to.
Mhm. All right. Well,
So
thank you, Jennifer,
yeah,
this is really nice. I think this is a well put together chart of accounts. So next we'll show how to import this into your QuickBooks Online account.
yes. So in order to do that, there's several different situations that you would need to work with the chart of accounts. One is if you already have an established chart of accounts,
Mhm.
you may need some tweaking. So you may just need to modify your chart of accounts, modify some of the names or also numbers of the chart of account.
Mhm.
So you may need to just make some modifications. If you are starting from scratch with a new QuickBooks account, then we suggest using something like our chart that we have created, and you can export it into QuickBooks. So it depends on your situation, which way you need to go.
Awesome. Thank you so much, Jennifer, for sharing that. I honestly believe this is a beautiful chart of accounts if there can ever be such a thing. Next, let's show everyone how you actually go about doing the import.
So let me show you how to get into a QuickBooks account if you're starting from scratch. You simply go to the QuickBooks account, Intuit's website, and you're going to set up a new account. So the information that it needs to get started would be your email, your phone number, and a new password. So it's simple as that. So we're going to continue on with the free trial. So it's going to pull up. It wants the basic, simple information about your company. So from here, simply put in your company's name and leave the industry blank. Click next, and you go on to the next step. This will leave it so that there'll be a blank chart of accounts for you so that you can import your own chart of accounts. So from here, you want to it wants to know what kind of things you want to do in QuickBooks. So we are just going to send and track invoices, organize our expenses. We'll just leave it at that. Do we have employees? Right now, we're going to say no, and that you can pick whatever you want. I'm just going to do this right here, and nope, we're going to do it all by ourselves. So here we go. Now you're going to select what kind of company you have. So we're just going to pick a partnership, and we provide, let's just do something else. You can pick whichever one you want. This is a basic setup so that QuickBooks knows the basic general decision on how to set it up. But since we're importing our own chart of accounts, it's totally fine. We want to automatically link it as correctly for right now, or actually we want to manually for right now, just so that you can come back and change that at a later date as well.
Okay.
So from here, we are into the QuickBooks account. So now from here, you want to go to your accounting and go to your chart of accounts. So from here, we want to see our chart of accounts. These are the basic chart of accounts that QuickBooks is going to put into every QuickBooks account that they have. So from here, you can do two different things. One is you could go in and update this. So cars and trucks, you can change that to a specific account if you would rather, or you can leave it here and delete it as you enter in your own. So to edit an account or to make it inactive, you click on edit, and then you can change the names if you would rather. So if you want to change this to something else, so just as advertising, you can save and close. If any of these you want to make inactive, meaning it's hiding, so it's not actively being used. So you can go ahead and do that. Keep in mind, again, that you only have 250 accounts that you can use. So the accounts that you are not using, it's best if you make inactive so that you don't go over your limit. Okay. So from here, you can import your own chart of accounts. So for here, what we would like to do is we would like to upload our own. I've already saved our account up here. So we're going to upload that and click next. So on here, you'll see that it wants to verify that your detail type, your account name, account number, and your type. Again, we've already set all of that up for you, so there's no need to have to change anything. Just changing the names of accounts or deleting or adding accounts that you need. The next page is the import page. It's just going to verify that you are importing everything that you want to import and if there's any errors. So you click import, and it's going to bring over all of the ones that you imported. We purposely added a couple in here so that they're accounts that you need, but not necessarily imported. So we wanted to keep it on your chart of accounts. Like retained earnings is not something that you actually import. It's just something that you need to change the account number for. So we're going to just deselect all of these and import. So now you have your chart of accounts is all in here. From here, the only other thing that you need to do is you need to set up the numbering system if you choose to use that. We highly suggest it because of the fact that the numbering system is a good way for you to keep track of what your accounts are, and also to keep track of what is an expense and what is an income account, that kind of thing. So in here, you will go to a chart of accounts in advanced under the accounts and settings. You want to go in and you want to enable your accounts and also account numbers and just show them for you. You press save, and then in your chart of accounts, it will import all of those numbers that we had. So now from here, it's just a matter of updating the ones that don't have any numbers are either from previously what QuickBooks automatically pulled in, or stuff that needs to be updated, like retained earnings just needs to have the number added to it. So on here, it's as simple as opening this up and putting in the number. Oh, if you put in the correct number, I'm going to look up the number. So it's as simple as that. You just add in the number.
Okay.
So that is the basic way to work this. 3,800, I apologize. So while we're talking about that too, the numbering system, the numbers that we have in our chart of accounts are a basic guideline based off of the typical numbering system, where ones are assets, two are liabilities, three are equity accounts, four are income accounts, and so forth. Everyone has a slightly different set of numbers. The important thing is that when you're setting up your chart of accounts, leave a little bit of space in between numbers, because again, as we said earlier, that this is a living list, a living chart of accounts. And so you may have another bank account later that you need to add, in which case you could add it simply in because you left a space open.
Right.
So that's the reason why you leave little bits of spaces.
Yeah, good suggestion. And there are a couple of these accounts, even if you did want to make them inactive, you would not be able to, correct?
Correct. And it depends on the banking system that you're using, especially if you're using an automated banking where QuickBooks is going to bring in your bank accounts for you from your bank account and read the balances and the transactions. There are certain accounts that it will not let you delete.
Okay.
And QuickBooks will let you know if you can't delete something.
Well, that is really quite easy. And as we've said more than once, the chart of accounts is a living, breathing document that gives you clarity as you continue to grow and adjust. So keep looking at your chart of accounts and making updates. This has been a really helpful session, Jennifer. Let's highlight some of the benefits of why you want a super clean chart of accounts to begin with. First, it makes your accountant happier, right?
Yes, definitely. Which, when you make your accountant happier, that means less expense at the end of the year as well.
Yep. It's easy and more efficient for you to talk to your team and operate on a daily basis. It's a better story of the company. It's more complete, accurate record of the company activity. And it's easier to communicate with lenders and investors who need clean financials. If you use and have a good, clean chart of accounts, you will have clean, succinct financials, and that creates credibility. If you want to see more about creating a residential chart of accounts, check out our video here. If you are a company that has multiple real estate assets and are needing some help with asset and property management, and you use QuickBooks, please check us out at STRATAFOLIO.com and also look at our 10-minute pre-recorded video that talks about the services we provide. Make sure also to like us and subscribe to us so that you're reminded when we have new videos come out. Thanks again, Jennifer, for being here. We appreciate it. Take care, everyone.
Bye-bye.